Welcome to Crypto Journal. Hit that like button if you want more deep dives on how international financial institutions are quietly aligning with crypto infrastructure that retail investors don't even know exists yet. The International Monetary Fund just published a report stating that cross-border payment infrastructure is creaking and missing from many people around the world, and they're advocating for real-time settlement systems that sound exactly like what Zebec network has already built, yet nobody's connecting these dots. After you see how Zebec's continuous settlement model mirrors exactly what the IMF is now advocating for, you'll understand why institutional alignment happens in silence before it becomes public knowledge. We're in November 2025, and the IMF just released multiple reports and fintech notes about the urgent need for instant payment systems, 24/7 settlement, and reducing cross-border payment costs from 6% to near zero. Every single problem they identify, every solution they propose, matches what Zebec Network launched in 2021. Stick around because at the 18-minute mark, I'm going to show you the exact IMF language about continuous settlement and real-time payment flows that reads like a technical specification for Zebec's infrastructure. Let me start by explaining what the IMF actually is and why their policy positions matter for blockchain adoption. The International Monetary Fund was established in 1945 at the Bretton Woods Conference. It consists of 191 member countries. The stated mission is working to foster global monetary cooperation, secure financial stability, facilitate international trade, promote high employment and sustainable economic growth, and reduce poverty around the world. The IMF isn't just a think tank. They're the organization that provides loans to countries experiencing balance of payments crises. They provide technical assistance to central banks and finance ministries globally. When the IMF publishes policy recommendations, central banks listen. When they advocate for specific financial infrastructure, countries implement it. The IMF doesn't endorse specific private sector technologies publicly. They describe policy frameworks and technical requirements. Then private sector companies build solutions that meet those specifications. This is exactly the pattern we're seeing with Zebec. The IMF is describing the exact infrastructure that Zebec already built, without mentioning Zebec by name. Because that's how institutional adoption works. Policy frameworks come first. Technical specifications follow. Then private sector solutions that meet those specifications get adopted. Not through public endorsements. Through quiet integration as countries implement IMF-recommended frameworks. If you're still with me, comment IMF policy alignment. I want to see who understands that institutional validation doesn't come through press releases, but through policy frameworks that match existing solutions. Now let me show you the IMF's recent publications on cross-border payments and why they matter. In 2023, the IMF and World Bank published a joint paper titled IMF and World Bank Approach to Cross-Border Payments Technical Assistance. This document outlines 10 focus areas for improving global payment infrastructure. Every single focus area aligns with blockchain-based continuous settlement. Focus Area 1, access to payment systems. The IMF states improving direct access to payment systems by banks, non-banks, and payment infrastructures can allow cross-border payment services to be provided safely and efficiently. This is exactly what Zebec enables. Their WageLink application provides direct access to blockchain payment rails for employers, employees, banks, and payment processors. No intermediaries required. Focus Area 2, extended operating hours. The IMF recommends payment systems move toward 24/7 operations. They specifically mention the global settlement window concept, which is the period when the largest number of RTGS systems, real-time gross settlement systems, simultaneously operate. Currently, this is 0600 to 1100 Greenwich Mean Time on working days. The IMF advocates expanding this to full 24/7 operations. Zebec Network operates 24/7, 365 days per year. Blockchain doesn't have banking hours. Payments settle continuously, not during business hours. This is native 24/7 operation without requiring legacy systems to upgrade. Focus Area 3, interlinking of payment systems. The IMF states interlinking arrangements for fast payment systems allow banks and payment service providers to transact with each other without requiring them to participate in the same payment system or use intermediaries such as correspondent banks. Such arrangements can shorten transaction chains, reduce overall costs, and increase efficiency. Zebec integrated with Layer 0 in July 2025, enabling omni-chain interoperability. Payments flow seamlessly between Solana, Ethereum, BNB chain, and other blockchains without intermediaries. This is exactly the interlinking the IMF advocates, but achieved through blockchain infrastructure instead of bilateral agreements between traditional payment systems. These aren't coincidences. The IMF is describing infrastructure requirements. Zebec built infrastructure that meets those requirements. The IMF just hasn't publicly acknowledged which private sector solutions qualify yet. Let me show you the IMF's publications on instant payment systems and why they align perfectly with Zebec's model. In September 2025, the IMF published an article titled India's Frictionless Payments about India's Unified Payments Interface, UPI. The IMF praised UPI for enabling real-time payments sent and received easily across all participating apps and banks. UPI has become the largest real-time payment system in the world by volume, processing more than 19 billion transactions every month. The IMF highlighted two major benefits of UPI. First, a better user experience because consumers choose their favorite apps based on what they value, including ease of use, reliability, or language options. Second, more innovation because providers must consistently deliver and improve since switching is easy and users are not locked in. Now compare this to Zebec. WageLink enables real-time payments across banks, wallets, and payment apps. Users choose their preferred interface. Switching is frictionless. The underlying settlement happens on blockchain, which is faster and cheaper than UPI's centralized infrastructure. The IMF is praising centralized real-time payment systems, while blockchain has already achieved the same outcomes with better economics. Also in September 2025, the IMF published Southeast Asia's cross-border payment push. This article discusses how Southeast Asian countries are linking their instant payment systems for cross-border transfers. The IMF highlights Singapore's PayNow and Thailand's PromptPay as examples. These systems enable real-time fund transfers using only mobile phone or national ID numbers. The article states allowing international fund transfers using a mobile phone or ID number via linked instant payment systems would be even more transformative and a boon for the many families that rely on remittances from relatives working elsewhere in the region. The IMF emphasizes the Nexus Global Payments Initiative, a multilateral payment gateway that enables instant payment systems to connect to one another. Zebec already enables exactly this. Cross-border remittances using phone numbers, email addresses, or wallet addresses. Near zero cost. Instant settlement. No need for bilateral links between countries. The blockchain is the multilateral gateway. Every country with crypto adoption can send and receive through Zebec infrastructure without negotiating bilateral agreements. The IMF is describing the ideal state for cross-border payments. Zebec has already achieved it. The missing piece is institutional recognition that blockchain infrastructure solves the problems the IMF is trying to solve with traditional systems. Now let me reveal the IMF's technical notes on CBDCs and digital payments that read like Zebec's technical documentation. In May 2024, the IMF published cross-border payments with retail central bank digital currencies, design and policy considerations. This fintech note analyzes how CBDCs could improve cross-border payments. The IMF identifies 5 key elements of cross-border payments: access, communication, currency conversion, compliance, and settlement. For settlement, the IMF states payments involve the transfer of information which can be managed to overcome basic economic frictions. They advocate for programmable money where payment conditions can be encoded into the transfer itself. This is exactly what Zebec's continuous settlement protocol does. Smart contracts encode payment conditions. Money flows according to programmed rules. Employment contracts, vendor agreements, subscription payments, all automated through smart contracts. The IMF is advocating for what Zebec already built. The IMF note also discusses automated market makers, AMMs, for currency conversion within CBDC platforms. They state AMMs can provide liquidity for foreign exchange within the payment platform, enabling seamless currency conversion during cross-border transfers. Zebec integrates with decentralized exchanges for automatic currency conversion. Users send USDC and recipients receive it in their local stablecoin or crypto asset. AMMS provide the liquidity. All happens automatically within the payment flow. In October 2024, the IMF published another fintech note titled Positioning Central Bank Digital Currency in the Payments Landscape. This note compares CBDCs with fast payment systems and e-money solutions. The IMF emphasizes that payment infrastructure should enable real-time settlement, 24/7 availability, and interoperability across systems. Again, these are the exact characteristics of Zebec network. Real-time settlement by design, always available, interoperable across multiple blockchains. The IMF is defining the ideal payment system, and blockchain-based continuous settlement protocols like Zebec already meet every criterion. Comment continuous settlement protocol if you're seeing that Zebec built exactly what international financial institutions are now advocating for. Let me show you the IMF's stance on stablecoins and why it creates a pathway for Zebec adoption. In April 2023, the IMF launched the Universal Monetary Unit through their Digital Currency Monetary Authority. This is designed to facilitate SWFT transactions on cross-border transactions at wholesale FX rates instantaneously with real-time settlements. The IMF is building infrastructure for instant cross-border settlement. They're not doing this in isolation. They're creating frameworks that private sector stablecoins and blockchain payment systems can plug into. Zebec uses USDC, the most widely adopted institutional stablecoin. Circle, the issuer of USDC, works closely with regulators and international financial institutions. In the IMF's digital payments and finance topic page, they state new firms and even open source developer communities have introduced new digital assets such as crypto assets, stablecoins, and e-money, some of which can be used for payments. Financial firms are also issuing and transacting assets on new infrastructures leveraging distributed ledger technologies. The IMF acknowledges blockchain-based payment infrastructure exists and is being used. They're not hostile to private sector blockchain solutions. They're studying how these solutions fit into the global financial system. And when they describe ideal payment infrastructure, continuous settlement, 24/7 availability, near zero cost, instant cross-border transfers, they're describing blockchain-based systems like Zebec. Now let me explain why the IMF doesn't publicly endorse specific blockchain projects, but their policy frameworks create adoption pathways. International financial institutions operate on policy, not on product endorsements. When the IMF wants to encourage a technology, they publish technical frameworks, policy recommendations, and best practices. Then member countries implement solutions that meet those frameworks. The IMF published extensive documentation on what modern payment infrastructure should look like. Real-time settlement, continuous availability, interoperability, programmable payments, low-cost cross-border transfers. These specifications describe blockchain-based continuous settlement perfectly. Countries and central banks reading IMF guidance will evaluate technologies that meet these specifications. Zebec meets them. This is how institutional adoption happens. Not through the IMF saying use Zebec network, but through the IMF saying modern payment infrastructure requires these characteristics. And Zebec happens to be one of the few systems globally that has those characteristics built in from day one. Central banks exploring instant payment systems will discover that blockchain infrastructure achieves the same outcomes as building centralized fast payment systems, but with better economics and greater interoperability. As they evaluate options, Zebec becomes a viable solution. This is the missing connection. The IMF's policy advocacy for continuous settlement and real-time payments creates demand for exactly what Zebec built. The adoption happens through central banks and financial institutions implementing IMF-recommended frameworks, not through public endorsements. Let me show you the specific IMF focus on remittances and why it perfectly aligns with Zebec's value proposition. The IMF has consistently highlighted the high cost of remittances as a major barrier to financial inclusion. Current remittance costs average 6.35% globally. In sub-Saharan Africa, costs reach 7.73%. The IMF has called for dramatic reductions in remittance costs to near zero. In their 2023 Cross-Border Payments Technical Assistance paper, the IMF states cross-border payments are the lifeblood of the global economy, facilitating remittances, business transactions, and the movement of capital that fuels development. But the infrastructure is creaking, and it is missing from many people around the world. This language is stark. The infrastructure is creaking, missing from many people. The IMF is acknowledging that traditional correspondent banking systems can't serve the remittance market efficiently. They're calling for new infrastructure. Zebec is new infrastructure, built specifically for instant, low-cost cross-border payments. Zebec's WageLink application enables near-zero cost remittances. A worker in the United States can send USDC to family in the Philippines instantly at essentially no cost. The recipient can hold USDC, convert to local currency, or spend using a Zebec card. The entire flow happens in seconds. This is the exact solution the IMF is calling for. The IMF's advocacy for remittance cost reduction creates policy pressure on governments to adopt more efficient payment infrastructure. As governments evaluate options, blockchain-based solutions become attractive because they achieve near-zero cost naturally through technology, not through regulatory mandates that try to force banks to lower fees. If you're still watching, comment remittance revolution. I want to know who understands that blockchain solves remittance problems that traditional banking can't fix. Now let me address the regulatory and compliance aspects because this is where the IMF's guidance creates pathways for Zebec adoption. The IMF emphasizes that any new payment infrastructure must maintain safety, security, and integrity, including compliance with anti-money laundering and counter-financing of terrorism rules, AML, and CFT. Zebec hasn't ignored compliance. In June 2025, they acquired GateKnox to embed KYC and AML tools directly into payment infrastructure. This isn't optional for regulated financial institutions. Banks and payment processors require enterprise-grade KYC. Zebec built it. They also completed SOC 2 Type 2 compliance in August 2025 and are pursuing ISO 27001 certification. The IMF's fintech notes consistently emphasize that digital payment systems must meet regulatory requirements before central banks will adopt them. By building compliance infrastructure, Zebec is positioning to meet IMF-recommended frameworks. When central banks evaluate blockchain payment solutions, compliance is the first question. Zebec can answer yes to every compliance requirement. Additionally, the IMF advocates for interoperability between traditional and digital payment systems. They don't want blockchain solutions to operate in isolation. They want bridges between legacy banking infrastructure and new digital rails. Zebec's partnership with Circle for USDC integration and their acquisition of traditional payroll companies through Payroll Growth Partners creates exactly this bridge. Zebec isn't asking traditional financial institutions to abandon everything and go fully crypto. They're providing a hybrid model where traditional payroll processors can use blockchain settlement in the backend while maintaining familiar user interfaces in the front end. This hybrid approach aligns perfectly with the IMF's vision for gradual modernization of payment infrastructure. Let me connect this to emerging markets where the IMF has the most influence. The IMF provides technical assistance primarily to developing and emerging market countries. These countries face the highest remittance costs, the least developed payment infrastructure, and the greatest need for financial inclusion. They're also the most open to adopting new technology because they're not locked into legacy systems. When the IMF advises these countries to build instant payment systems with real-time settlement, blockchain becomes an attractive option. Building a centralized fast payment system like India's UPI requires significant government investment, technical expertise, and time. Integrating with existing blockchain infrastructure like Zebec requires minimal investment and can be deployed rapidly. Countries in Africa, Southeast Asia, and Latin America are prime candidates for blockchain-based payment infrastructure. The IMF's policy recommendations for these regions create demand for solutions like Zebec. As these countries implement IMF guidance, partnerships with blockchain payment providers become logical next steps. This is where silent institutional adoption happens. A developing country works with the IMF on payment system modernization. The IMF recommends real-time settlement and low-cost cross-border transfers. The country evaluates options and discovers blockchain solutions meet the requirements. They pilot Zebec infrastructure under NDA. No public announcement until deployment is proven successful. Then suddenly, An entire country is using Zebec for cross-border payments, and nobody in retail crypto knew it was happening. Now let me address the timeline for when IMF policy alignment translates to visible adoption. International financial institution policy cycles move slowly. The IMF publishes research and recommendations. Member countries review and debate. Central banks conduct pilot programs. Regulatory frameworks are updated. Then deployment happens. This entire process takes 3 to 5 years minimum. The IMF started publishing extensively about instant payment systems and cross-border infrastructure improvements around 2022 to 2023. Their most detailed technical notes on CBDCs, fast payment systems, and digital payments came in 2024 and 2025. This suggests we're in the pilot and evaluation phase now. Widespread deployment would happen 2026 through 2030. This timeline aligns perfectly with Zebec's positioning. They built infrastructure in 2021 and 2022. They've spent 2023 through 2025 adding compliance, acquiring traditional finance companies, and building bridges to legacy systems. By 2026 and 2027, when countries are ready to deploy IMF-recommended infrastructure, Zebec is positioned as a mature, compliant, proven solution. Institutional adoption doesn't happen through retail hype. It happens through policy alignment, technical evaluation, pilot programs, and deployment. All of this occurs under NDA before any public announcements. The IMF's policy advocacy for continuous settlement creates demand. Zebec's infrastructure meets that demand. The connection becomes visible when deployments are announced, not during the evaluation phase. Let me show you the specific language from IMF publications that mirrors Zebec's technology almost word for word. In the IMF's note titled The Rise of Payment and Contracting Platforms, published in July 2023, they discuss what they call XC platforms for extended settlement and contracting. The IMF describes a vision where payments do not just involve the transfer of funds from A to B. They also rely on a variety of complementary services, such as accessing foreign exchange, which can be programmed for greater safety and efficiency. And payments involve the transfer of information, which can be managed to overcome basic economic frictions. This is a technical description of smart contract-based payment streams. Programmable payments, automated currency conversion, information transfer alongside value transfer. This is exactly what Zebec's continuous settlement protocol does. The IMF is describing the architecture of blockchain-based payment systems without explicitly saying blockchain. They continue. Commercial bank money could be escrowed, then represented digitally on a common ledger and transferred there among participants. The digital representation would be standardized and the ledger widely accessible by institutions complying with AML and CFT requirements. This is describing tokenized stablecoins on a blockchain ledger. USDC held in Circle's reserves, represented digitally on blockchain, transferred among participants. Standardized through ERC20 token standards or SPL token standards on Solana, accessible by compliant institutions. This is the exact infrastructure Zebec uses. The IMF's vision of programmable payment platforms is already live on Zebec. The policy documents are describing future infrastructure, but that infrastructure already exists. It's just not institutionally recognized yet. When central banks implement IMF-recommended frameworks in 2026 and 2027, they'll discover that private sector blockchain solutions already built what they're trying to create. This is Crypto Journal, and I want to leave you with this insight. The International Monetary Fund is one of the most influential financial institutions in the world. When they publish policy recommendations, central banks listen. When they advocate for specific payment infrastructure characteristics, countries implement solutions that meet those specifications. The IMF has spent 2023 through 2025 publishing extensive documentation on the urgent need for instant payment systems, continuous settlement, 24/7 availability, near-zero cost cross-border transfers, and programmable money. Every single characteristic they describe matches Zebec Network's architecture. Real-time settlement, continuous payment streaming, 24/7 operation, near-zero transaction costs, programmable payments through smart contracts, cross-border interoperability. The alignment is too precise to be coincidental. The IMF is describing the ideal payment infrastructure. Zebec already built it. The missing connection is institutional recognition. The IMF doesn't publicly endorse private sector technologies. They describe policy frameworks. Then countries and central banks evaluate which technologies meet those frameworks. As this evaluation process unfolds over 2026 and 2027, Zebec is positioned as one of the few systems globally that meets every IMF criterion for modern payment infrastructure. This is how institutional adoption happens in silence. Policy alignment comes first, technical evaluation second, pilot programs third, public announcements fourth. Retail investors typically only hear about step 4. By then, price has already moved. Those who understand policy alignment and position during steps 1 through 3 capture asymmetric returns. If you found value in this institutional policy analysis, smash that like button. This type of deep dive requires reading dozens of IMF publications, connecting policy language to technical implementations, and understanding how institutional adoption actually works. Your engagement helps me reach people who think strategically, not reactively. Join the channel membership for exclusive tracking of which IMF initiatives match which blockchain protocols, when central banks announce pilots that use crypto infrastructure, and which developing countries are most likely to adopt Zebec-style payment systems. The join button is right there next to subscribe. After understanding IMF policy alignment, you know why tracking these developments before they become public is everything. Drop a comment telling me, do you think the IMF is intentionally describing blockchain payment infrastructure in their policy documents? Or is this convergent evolution where blockchain and traditional finance are arriving at similar solutions independently? I read every comment, and your perspectives shape future analysis. Subscribe if you haven't already, because as IMF policies get implemented by central banks, as developing countries deploy instant payment systems, and as the connection between policy frameworks and blockchain solutions becomes undeniable, I'll be covering every milestone. The IMF is quietly supporting the Zebec network model. They just haven't said so explicitly yet. See you in the next one.